Hey everyone, Tyler Schachter here with Elevation Real Estate. And as you know, we've been staying home and practicing our social distancing for about 7 weeks here. But, for what? There we go. We're back. Well, it's not quite back to business as usual yet, but with the announcements made by the BC government and provincial health authorities yesterday, it looks like there's a light at the end of the tunnel. So we want to start preparing for what re-entry into the new normal looks like, whatever that is, and let's chat about what's going on in the market and the world around us today.
Hey everybody, Donavon here with the Elevation Real Estate Group. I'm joined by Tyler and Joel Schachter, our fearless leaders here.
Howdy.
So today we wanted to talk to you guys about what happened in April. Last month we did another video about March and what we were talking about and thinking about what was going to happen in the future. But we have some statistics for you which will paint a bit of a picture of what happened in April. And that's a great place to start. So let's start with new listings. There was 1,416 new listings that came on the market in the month of April. And that may sound like a lot, but that's actually 40% less new listings than we had in March and 58% less new listings than we had in April of 2019. So far less people putting their homes on the market for obvious reasons. In sales, we had 688 sales, which is down 52% from the month before in March and down 50% from April of 2019. So usually as we come through March, April, into spring, we see the inventory levels climbing, then it will slow down a little bit through summer and then pick up again. Right now, we've seen inventory at a balanced level because not enough new product came on the market to really boost our levels of inventory. And there was a little bit of absorption. So those 688 sales took place, which took some of that inventory off the market, keeping it pretty balanced. So Joel, why don't you explain a little bit of what this means if someone is buying and selling in this market today? How should they be interpreting these statistics and looking at what's going on right now?
Yeah, thanks, Donavon. So, a month and change ago, we were telling everybody, buyers and sellers, listen, unless you have to make a move, we suggest you just hang tight because we're into unprecedented times. There's a bit of a turmoil. And we don't know why this is going to settle out. So unless you are absolutely needing to buy or sell for very specific reasons, our recommendation was to hang tight. So, and most people listened, and I think the advice we gave is similar to what other realtors were passing on to the community out there. And so, but now we're here, a month and change later, and we've got governments talking about, slowly getting the economy back on its feet. And you know what? There's been buyers that have been sitting around, some of them for a year and a half, some of them just for the last few months, who are tired of waiting. And they've started to edge back into the market, and we're starting to get calls and inquiries and requests to view properties. Some of the positive things about that is, as Donavon mentioned, prices have not, interest rates they've come down. So it's been more attractive, and there's been an economic stimulus provided by the government. So anybody who's actually working, which is the majority of us, or knows they're going back to a job, they're not worried that they do have a job once this settles down to the new normal. They're out there and looking for opportunities. For you buyers that have been thinking, oh, this is a great time, I'm going to get a steal of a deal. Those kinds of opportunities, they were very rare in this last month and a half. There was only a few very panicky people or legitimate people who had to sell for health or business or finance reasons. The majority of people have held closer to their prices. So the opportunities for buyers were pretty good over the last few months, but not what was expected.
Prices really haven't changed at all, Joel. Like you were commenting on, prices have remained very, very stable through this last month. So.
Yeah, except for the odd anomaly, it's been a fairly stable. Prices have held up. Now, if I was a seller, again, we told sellers, hold off, unless you really have to sell. There are sellers out there who had to sell, and we had to help facilitate them through this time of the market. But there are other sellers that we said no, and they held off. But now the situation again, it's not shouldn't be business as usual. However, there is opportunities for sellers that were waiting to make a move. They can now make the move because, as I mentioned a minute ago, there are buyers out there. And the thing is with sellers, those of you that are thinking of selling and trying to get the prices of the peak of the market, you're having to be more realistic about what to accept out there. You can't just ask crazy prices now that, if the market's starting to come back, it's not going to come back to the frenzy that it was a while ago. That's my sense for sellers, to be honest.
Yeah, I agree. So Tyler, take us a little bit into your crystal ball here and tell us what you see happening in the future. Obviously, you don't actually have one of those, but there is some ways that we can make predictions looking at statistics and trends, and Tyler's great at that. So what have you been seeing, Tyler?
Yeah, of course, we can't predict the future. We don't know exactly how this is all going to unfold. That's why often I will review a variety of sources of opinions and predictions of what's going on out there and how this is all going to play out. So one of them that came out last week was a report by CIBC Economics, Benjamin Tal. He was talking about the economic fallout of the business shutdowns and people that did lose their jobs. And of course, the result of that is demand is expected to diminish over time in the market. Not quite immediately, as Joel was touching on. We're still seeing fairly strong demand with people that have been waiting and low interest rates. But interest rates are expected to rise, and a lot of businesses that shut down may not open up again. So they're expecting a weaker jobs market and weaker investment. And while it's dangerous to try and pick exact numbers on where we think that's going to end up, this report was predicting about a 10% correction in the market as we come through 2021. So that's not going to happen overnight. We're not going to see the prices drop 10% by July. But as this whole thing stabilizes and supply starts to increase and demand maybe can't keep up with it through the fall and into next year, by the middle or late next year, we could see prices that are 10% lower than they are today, 12 to 18 months from now.
Yeah. Now, you mentioned interest rates might increase. For those of us that don't know, if you don't know, why would that happen? With what's going on in government today, what would cause that to happen?
Yeah, so there's lots of reasons that interest rates can increase, but try and keep it simple in an area that's not my area of expertise. I'm not the economist or the mortgage broker, but one of the things we've seen through this pandemic is a flurry of government stimulus. And really what that means is they're printing money. And when they print money, that's designed to stimulate the economy, get people spending again, get jobs back in place. When they start to see that happening, that can lead to inflation. When they see inflation, that can cause interest rates to rise. So all that money, and there was a lot of it, I don't know that we've ever seen a stimulus package like the one that was just released over the last months. If that starts flowing into the market and we see inflation, we're expected to see interest rates rise alongside that.
Absolutely. So that's a really good thing to point out for anyone that's considering buying real estate. And if you're sitting on the sidelines and you're saying, I'm waiting for that 10% decrease in value to jump into the market and get something at a really good deal, those rising interest rates could really put you in a bad spot in the future. So we did a little bit of math here, and it turns out that if there was a 1% increase in interest rates, which are at about 2.49% today, so if those went to 3.5%, that would equate to about a 10% drop in price. So if you were buying a $600,000 townhouse today, you put 20% down, you have a $480,000 mortgage. And just for easy round numbers, you're going to have a 3% interest rate on your mortgage for the next 25 years. Your payment would be $2,271 per month. Now, if that interest rate went up to 4%, everything else being the same, your payment would go up to $2,524. So it's about a $250 increase per month just in that 1% interest rate increase. Now, that doesn't sound like a lot on a monthly basis, but you're stretching your mortgage out over 25 years. So that actually equates to, if you bought that same home and at that higher interest rate, instead of paying $600,000, you'd have to pay $540,000 to keep your monthly payment the exact same. So by buying today with these record low interest rates, you're actually really helping your monthly payment stay low. Even if you pay 600, it's equivalent to paying 540 at a 1% higher interest rate. So something to think about, something to chew on. I'm probably going to do a separate video just on that to break it down into more detail for people. So if you're interested in that, stay tuned for that in the next month or so. But that's something to think about if you're a buyer that has been sitting on the sidelines. It might be a good idea to jump into the market now with these low interest rates and secure that monthly payment for the next 25 years or 5-year term. Anything else that you guys want to add, Joel or Tyler?
Yeah, and just to reiterate what we've said in past videos and communications, we're never the people that are going to tell you now is a great time for buyers and now is a great time for sellers. Every person's unique situation and scenario is different. And what we need to do is sit down and chat with you and figure out what your long-term goals and plans are, your hopes and dreams, where you're at, where you want to be, and then figure out how the current market conditions can be a benefit to you. So we can help explore that to you. If now is a good time, if later is a good time, what the potential roads look like, and see what you're most comfortable with.
Absolutely, yeah. Always feel free to reach out to us, guys, if you do need any help or you have any questions about real estate or the current market or where it's going. We're always here for you. Thanks a lot for joining us, guys, and we'll see you in the next video.